Banking, metal and pharma stocks lead broader markets down. Mid-cap index falls as much as 2%. Reliance Capital and Canara Bank weaken further as traders continue to accumulate short positions in their respective futures. And Shoppers Stop jumps as much as 20% after Amazon unit agrees to buy stake in the company. And Capacity Infra Projects lists at $399 per share compared to the issue price of $250 per share, and that's a 60% premium to the issue price.
All right, let's take a look at what the trends are indicating in the futures and options market. Let me tell our viewers, this is the expiry week, and so far for the September series, both the benchmark indices Nifty and Bank Nifty have turned negative. If you look at right from the start of the series, Nifty is now giving you negative returns of almost 0.3%, and Bank Nifty is down almost 1%. Let's look at today's session then. Nifty opened after breaching that 50-day moving average of about 99.54. And currently we are trading below that mark of 9,900, and let's see if the expiry actually happens below that 10,000 mark, which so far was considered crucial for Nifty levels going ahead. In terms of even if you look at the volatility, that continues to be on the higher side, where the VIX surged almost 10% on Friday. Today also the Nifty, the India VIX actually is trading with gains, and it has surpassed that mark of 13 today, indicating that there could be near-term more correction that one could watch out for. And also in terms of options data, what is it suggesting today? Once again, the call writing continues for Nifty strikes. For example, 9,900 and 10,000 are the strikes which are indicating maximum amount of open interest additions so far. And if you look at the put side, on Friday we saw unwinding happening, because of which your Nifty PCR also fell to levels of about 1.21. So put strikes like 9,800 and 9,900 have so far seen maximum amount of open interest addition. Quickly, if you could just pull up the Nifty futures and check what the premium picture is indicating, because remember, the premium on Friday, despite of that 1.5% correction, was intact. So far also the Nifty premium is at about 25 points, and the biggest question here, Agam, is whether at these levels somebody would dare to take long positions now.
Right, I'm also going to keep an eye on rollovers, of course, Navneet, because that's when we'll start moving in. But of course, we've also had a listing for Capacity Interest Projects, and let's take a look at what the management has to say, because you know, we've had a conversation with them, and well, it's listed at a good 45% premium. Let's listen in as to what the management is telling us about its future.
The funds have been raised for working capital, capex plans, and the remainder for general corporate purposes and the issue expenses.
So how is the current order book looking like? And if you could give us like some breakup of the order book?
So the order book is in excess of 4,600 crores, and it's into various geographies broken up with residential, commercial, and institutional buildings.
And what are the percentages of these breakups?
So in the building segment, that's the only segment we operate in. Residential would take about 87-88%, and the remainder commercial buildings.
Would you like to, going ahead, expand the commercial portfolio as well?
So if you look at the last 5 years, the work basically came in residential and the affordable side. Over the last 1 year, we are seeing good traction in the commercial buildings. And obviously, as a percentage which is more dynamic in nature, it would change.
So that's the manager of Capacity telling us about what's in store for the future. But let's take a look at some of the stocks which are looking at substantial increase in open interest. And I do want to pull out UBL. You know, United Breweries has seen a surge of as much as 10% in open interest, and it's followed by Castrol India, which is also looking at a surge of nearly 6%. Of course, you know, there are other stocks like PTC India, and I will talk about that in a little more detail when it comes to that stock, which is also seeing a surge of as much as 6% in open interest. In terms of some other counters which are looking at a considerable amount of unwinding, well, we have Repco Home Finance, 4% decline on OI, followed by IGL, down 3.3%, and NACL also as much as 2.7%. But to bring into focus PTC India, this is a stock which really hasn't done too much over the last 3 to 4 sessions. And its September futures are now looking at a 6% surge. Do remember that these futures are likely to expire this Thursday, but we are looking at a lot of build-up in PTC India. And the second stock, of course, is Cadila Healthcare. It is on a downward trend for now. Its September futures are also looking at near 4% increase there. And of course, shorts building up with the stock itself declining by as much as 1.4%. We really haven't seen too much in the last 1 month, for that matter, when it comes to Cadila Healthcare. So perhaps a down move, it could. At least that's what the futures are indicating, Navneet.
Well, clearly, so far, the kind of losses that one has seen on the index today, in the last 2 trading sessions, we wiped out all the gains that one was seeing for the September series. But high volatility day once again, as India VIX is trading at those levels of about 13.2. The market breadth today is once again not looking good at all, because you've seen deeper cuts coming in the broader market indices. The mid-cap and the small-cap index have seen greater cuts in today's trading session. However, there are a couple of stock futures which are bucking the trend in today's trading session. For the likes of Godrej Consumer, that stock's seen good gains coming about after Credit Suisse has actually upgraded the counter and the outlook going ahead. What Credit Suisse has indicated so far, the Indonesian business was an overhang, but according to Credit Suisse, all that has been priced in, as the stock currently trades with cuts of almost 10 to 12% from its first quarter earnings, mind you. But so far, the stock future of Credit Suisse is bucking the trend, of Godrej Consumer. The other stocks, Agam, which are doing well are the likes of UBL. And if I'm not mistaken, in a weak market like on Friday as well, UBL ended the day in green. So certainly there is some sort of strength which is being seen for UBL, and the other counters, Power Grid, Tata Power, as well as HUL, have seen some sort of traction in today's session.
Right. Navneet, I also want to talk about 2 stocks which have seen further weakness. Reliance Capital is one of them. We saw a decline last Friday, and it continues to fall further, along with the fact that there has been more accumulation towards the short side when it comes to this particular counter. And it's not just Reliance Capital. We are also looking at further weakness in Canara Bank, which is also down. And again, in case of Canara Bank, further accumulation of open interest towards fresh shorts. A lot of weakness in these 2 counters. So all those who took fresh shorts last Friday are certainly making some amount of profits today. At
least somebody is making money in this kind of market, Agam. But look at Infibeam, that's fallen almost 15%. That stock's also in the F&O band, so certainly telling you there is some sort of unwinding which is taking place in terms of Infibeam, and it looks like so far it is long unwinding for this counter. Infibeam down almost 15% today, and the other counters which are seeing major selling pressure coming about, I'm only talking about the stock futures here. Chennai Petro is the other one which has seen huge amount of cuts coming about. That counter is also down nearly 5.5%. Indocown, L&T Finance, India Bulls Housing Finance, Divan Housing, the other counter in F&O band, has seen greater cuts. In fact, stocks like Bajaj Finance, so far these are the counters which have been outperforming. We've seen good gains for counters like Bajaj Finance. That too has seen some sort of selling pressure. Actually, this could be profit booking also, which one can expect from counters like Bajaj Finance, which so far have been outperforming, Agam.
Right. Well, Navneet, considering we are looking at so much weakness, let's get in a view from our experts. Let's welcome in Nirav Chheda, the derivatives and technical analyst at Nirmal Bang Securities. Hi, Nirav. Thanks for joining us. Well, we are looking at a substantial amount of weakness now. Tell us, what can traders do with the Nifty 50 index?
Yeah, see, the first sign of this weakness was there on Friday. If you see, this was a put heavy month where we started at 1.3839 PCR. However, that went up to 1.6, 1.7. Now on Friday itself, from 1.55 odd, it fell to 1.24, where calls were really written very aggressively at the 10,000, 10,100 strike. So that was a bearish sign. The second sign was the 10,000 put had the highest open interest, which then fell to 9,900. Now this is going down even lower to 9,800, 9,600 put strikes. Also, technically, if you see, 50-day moving average was a strong support every time Nifty came down in this bull trend, and that has been broken below for the first time in several months. So I expect Nifty to come down pretty downwards towards 9,600 odd levels. One can do a strategy and alternatively also buy a 9,900 put option. You can see 9,600 levels very soon.
Actually, the return that you're seeing on your screen for the September series so far, Actually, the cuts are now deeper as the Nifty has seen cuts of almost 109 points. Sensex 2 is trading with those cuts of almost 293 points. So probably Bank Nifty is down over 1% for the September series, and you've got Nifty also, which is down almost 0.4 to 0.5%. But Nirav, where do you see the expiry on Thursday? That's the biggest question that one will be asking you right now. Do you think we can touch those 10,000 mark, or the expiry could likely happen below that 9,900 mark?
Looking at the data right now, the rollover data will continue from today onwards, but looking at the open interest data on the index, I feel it is going to be below 9,900 levels, basically because of two things. The open interest on the put side is now going downwards, which is not a very good sign. The PCR is going downwards again. Also, 9960 is broken, which was a 50-day moving average. Very, very strong support for Nifty. So by Thursday, we are going to come down towards 9800, 9850 onwards, which is where you can expect the expiry.
Well, of course, we do have Shopper Stop. The management of Shopper Stop also talked to us about what's happened in terms of the development with the investment coming in from Amazon.com, which will pump in as much as 179 crores in the company. Alex Matthews of BloombergQuint spoke to the managing director, Govind Shikhande, and here's what he had to say about the use of funds. Let's listen in.
I think we are on a path of continuous growth, and we believe that the Indian retail, the physical side as well, is still under-penetrated. So I think this will help us to further invest more, and we are going to open about 5 stores in the second half of this year, and there's a plan of another 15 stores for the next 4-year period.
So most of it is going to be used to bolster the infrastructure.
Expand the footprint as well.
And this has nothing to do with the investment that you talked about with regard to Hypercity. That's a completely different story
Absolutely
altogether.
different, correct.
What's the update on that?
So Hypercity, as you're aware, we have been talking to multiple investors over the last 24 months period to bring in investments into that business. As of now, we are in, I would say, the final lap of discussion with a few players, and I believe that we are confident of announcing the next step in about 4 weeks' time.
And this will be in the range that you've already mentioned, between 150 to 200 crores.
So there I can't say the number right now, but yes, we would be in a position to really announce what will happen in Hypercity in terms of its contour, not being able to talk about it right now, but in about 4 weeks' time, we'll be ready for announcement.
So the management of Shopper Stop telling Alex Matthews that they will be using funds to expand their stores, but there is one stock that I do want to pull up right now. It is Infibeam. The stock is tumbling. It's corrected by as much as nearly 30% for now. This stock is in F&O ban, which is why you won't see a substantial increase in open interest, but there you have it. The spot price is now down by as much as 34%. Do keep an eye on that one. Of course, we will also be watching out for whether or not the kind of correction that we can see as far as Infibeam.
When we started the show, we addressed Infibeam was down 15%. So it's actually in the last 10 minutes that magnitude of fall. If you can see, it's down almost over 30% now, down 35%. That's the intraday chart clearly telling you that it opened weak, but in just last 10 minutes, as you can see, there was more selling pressure which came about. And as Agam was mentioning, it is in the F&O band. So to me, it looks like there is a lot of unwinding which is taking place in today's session. And in this kind of unwinding has to be related to the long positions.
Absolutely, Navneet. I want to take a look at its October futures too. And once again, we'll have very little change in its October futures. We're looking at just about an increase of nearly 3% there. Of course, you can take intraday positions, but you cannot carry your positions onward to the next day because it's an F&O ban. But well, substantial weakness, and we will be keep giving you updates as far as Infibeam is concerned. Moving on.
All right, so that's the update on Infibeam. The October futures are seeing some sort of OI build-up, but it is in the F&O band. But let's shift our focus to options corner now, and let's go across to Nirav to find out what are the option strategies that he's suggesting. But he has a nifty long straddle. Before I go to him, let me explain to our viewers what exactly is that strategy. The long straddle is when one buys and at the money calls and puts in anticipation of increase in volatility, which has happened so far in today's session. So when volatility increases followed by expansion in options premium, the strategy becomes profitable. Nirav, explain your strategy to our viewers.
Yeah, you did most of the thing. I'd just like to say, as VIX is increasing, buying options would be the best strategy going forward. Now, when I gave this strategy, Nifty was around 99.20, 99.30 odd levels. It has come down to 98.60 odd levels. You can still go long on 9900 straddle, which can give you a premium around 100, 110. Now, when this premium shrinks to about 40 points or 75 points in total combined premium, that should be your stop loss. And once it goes up towards 180, 200, that should be your target. Now, I expect Nifty to move at least up till 9600 levels. However, as this is the expiry week, always go with a strategy, and for today the strategy is the straddle. So one can go long on the long straddle, the 9950 call and put, and buy it for a target of 180.
Okay, so that's your call on the straddle, and Nirav is going long on that one, considering an expectation of increase in volatility, which is usually the case in many expiries, though it has not been come to be, at least in the previous two ones. But Nirav, I do want to pull up Indiabulls Housing. It's the leading loser on the Nifty 50 index. It's down as much as 6%, and understandably so, we are looking at more accumulation of short positions. Do you have a call on Indiabulls Housing Finance? What should one do with it?
See, Indiabulls Housing Finance has a very good support around 1155 levels. Now, I will not short at current levels. It has been moving in a higher top, higher bottom formation. You can see long creation being built at every downfall. So, at current levels, I would not go for a short. I would wait for it to break 1150 levels. Once it goes down below that, I can see short creation. Only then will I go short in this. And once it breaks 1150 levels, I can see 1000 levels coming soon for this counter. So, one can short below 1150 levels with a stop loss of 1180.
Nirav, Infibeam is the counter which is in focus. It's seen the biggest percentage fall since listing. The stock's been down in the last 5 trading sessions. At current levels, would you recommend people taking fresh shots?
Yes, I would. See, Infibeam has broken its very strong support, its previous swing bottom also of 92 as you were speaking. It is 38% down. However, one can go short further until it remains below 92 levels. That should be your stop loss level, and the possible target for this can be around 70 levels. You can find it in 1 to 2 days. However, this is in ban, so this should be only intraday.
All right, Nirav, so we're going to keep an eye on Infibeam, of course, but it's time to move on and address the queries of our viewers. Our first caller is Kunal Joshi, who's calling from New Delhi. Hi, Kunal, thanks for joining us. Tell us, what is your query?
Hi, I'm long on one lot of Lands Capital September futures at ₹702. So what do you think I should do after 2 days of fall? Do you think I should roll over my position to October?
Well, Nirav, Kunal has bought a lot of Reliance Capital futures, and he is certainly in, making losses right now, considering the fact that we have seen a considerable fall in the last couple of days. What can he do? Nirav?
See, Reliance Capital has very good support around 600. Yeah, you can hear me?
Yes, please go on.
Hello, you can hear me?
Yes, please go on, Nirav.
Yeah. See, Reliance Capital has good support around 610 levels. Now, if this goes below 610, one can exit positions until it doesn't cross below this level on the spot, on the cash. Only then you can roll over your positions. It has been going in a higher top, higher bottom formation, but with high beta, this moves very highly on the upside also and on the downside also. So one can roll over, but keep a stop loss of 610.
All right, Kunal, that's the view coming in on Reliance Capital, a counter which has seen good amount of cuts in the last 2 trading sessions. But on that note, let me also introduce our second guest, Himen Kapadia from Kira Choksi is right here with us in the studio. Hi, Himen, thanks for joining in. Before I go to my next caller, I just want your view on the markets right now.
Navneet, we walked into an abrupt correction. I think 9,700 was the previous support. I think till Thursday, we are in the range between 97 and 10,100. We're going nowhere. Some of the daily mechanical indicators have turned negative. The VIX has gone up.
Right.
So We've lurched into a correction. I think it's going to take some time to unravel. But having said that, I think post 230 we see a small bounce coming in.
All right, that's the view in markets by Himen. But let's move on to our next caller for the day. Mona Kale is calling us from Andhra Pradesh. Hi, Mona. Tell us what's your query on.
Hi, I bought Nifty 10,000 call at a premium of 110 rupees on Friday. Should I book losses at current levels?
What would you suggest, Mona? The premium has shrunk drastically.
I would have actually suggested a sell, Navneet, but I think since it shrunk so much, let's wait for a bounce. We're not hoping against hope. It's oversold, so a small I think 9825, 9840 was a very strong support resistance earlier area, Navneet. So I'd say a hold. I don't think she's going to make too much of money, but at least she can recover some of the premium that she lost.
Okay, Mona, so you can hold on to that particular call and at least recover some of the premium. But moving on, our viewers have also written to us on social media. And the first query is from Anju Kapoor, who writes to us from Kolkata. She wants to know at what levels is the September series expiring and what kind of range can one expect for the October series. Himen, what is your call on the October series? What range are you looking at? And what is also your expiry level when it comes to the Nifty for this one?
Agam, I think it's mission impossible, but I have a feeling, keeping everything else in mind, I have a feeling that we should be expiring somewhere between 99.20 to 99.80, the expiry. And coming back to October, I think as of now the 10,129 level is sacrosanct, so I think that is currently out of the equation unless something dramatically changes. So a range roughly would be between 97 and 10,129. That's the way I look at it, unless we see some new open interest build-up, so something out of the ordinary.
Right.
All right, Anju, that's the view coming in. For the October series, one can look at a range of almost 9,700 to about 10,000. But considering the kind of cuts that one is witnessing in today's trading session, if one had to look at the F&O data of Friday, clearly the FIs had bought a lot of puts and they had written a lot of calls indicating that the momentum in the near term could be on the downside. But let's move on. Arjun Jha is the other viewer who has written to us on Twitter. He's holding he has one lot of Torrent Pharma where he's long on September futures at a price of 1295. He wants to know, has the momentum changed for pharma companies and what should he do? Nirav, last week there were 2 to 3 trading sessions where pharma counters were bucking the trend, and in fact for Torrent Pharma I remember there were a lot of open interest build up on the long side which one was seeing, but at current levels where the stock has seen some sort of selling pressure, what would you recommend?
Yeah, I would recommend to buy even at current levels. See, pharma is bottoming out. I have seen a lot of volume built up in a lot of stocks, even in Torrent Pharma. As I look, there's been a lot of volume in the previous week. So someone is accumulating at lower levels. It is consolidating, which is a very good sign. The consolidation is broadly happening in between 1400 and about 1200 odd levels. So I would expect it to move up above 1400 levels very soon. It can come up towards 1600 levels. I would suggest to average it here and do not keep a stop loss of 1 or 2%. You can keep a stop loss only below 1180 levels and wait for the short to medium term for it to come towards 1600 levels.
Okay, so there you have it. Keep a stop loss of below the levels of 1180. But moving on, before we wrap the show, let's also take some strategies from our experts and what and how they are trading and taking these markets forward. Himen, I'm going to come to you. Do you have any strategies? You do have a lot of shorts for now.
Yes, Agam, but frankly speaking, looking at the way the markets have gone, I think without a bounce, it would be harakiri. So I'd suggest, I mean, obviously, I think it's no rocket science, even you'll be very clearly seeing that there's negative sentiment. But without a recovery, I think the risk-reward ratio is not in favor. So I have a few shorts, but I think only on a bounce. In terms of the Nifty, Agam, I have a feeling that we can sell a strangle. I suggest selling the 9600 next month put option and the 10,200 next month put option. The idea is not to hold it for a month, but the premiums are higher in the next month. The current month premiums have shrunk miserably. So this is just probably a 4 to 5 week trade or till Friday. I don't think it breaks 9600 on the downside nor 10,200 on the upside. So, and 4 or 5 days, I think you would get some decent decline in the time value of the option premium. So I think that's what I would suggest.
All right, so for people who do not know what selling a strangle is, it is selling an out-of-money call and an out-of-the-money put in order to eat the premiums, and you're working on the volatility falling to a certain extent. Of course, that will also mean that you'll see a contraction in option premiums, and that's something that Heyman is working with. But Nirav, I'm going to come to you on your strategies for stocks. What are you recommending?
See, both are sells. The first one is IRB. It has been moving in a lower top, lower bottom formation. No long creation seen in this counter in the last 2 to 3 months. I expect the stock to come below 200 levels. It can come down towards 190. You can sell on rise, as Heyman sir said. At 210, 212 levels, the stop loss should be 216 and your target would be below 200. The second strategy would be a sell on Indigo. See, Indigo is already below our target levels. It has fallen quite considerably, about 6% today. So when it comes up towards 1085, 1090 levels, that is where you sell. A lot of short positions have been seen in this counter. About 40% shorts were seen in the last week. So 40% increase in open interest in the last week. So again, one should be selling on rise on this counter. The target should be 1020 for this. You can keep a stop loss of 1100 on this counter.
All right, those are the two short strategies by Nirav. On that note, we like to guest both our guest, Heyman, as well as Nirav. Thanks very much for joining us today, giving us your view on the markets in the near term and also helping out our viewers with regard to their queries. But you can also write to us on Twitter, Facebook, or just call us on 022-4540-4141 with all your F&O queries, and we'll try and address as many as possible on the show. Just remember to add the AskBQ hashtag.
That's right. Well, that is a wrap on this edition of the F&O Show. Thanks for watching. But up next, we have BloombergQuint's Ask BQ coming up at 12:30 p.m. So stay tuned in.